So let's have an understanding of market structure. So what is market structure? Market structure is exactly how the market is going to be moving while making potential points and turning points in the market. Now, understanding this market structure is very, very important for you as a trader because it helps you to understand in which trend the market is in. If it's in a downtrend, is it in an uptrend, or is it in a consolidation? So that's the point where you're going to decide whether to take buys or to take sales. Now, by understanding market structure, it's going to be very important for you because this is actually the basics of trading forex. So you cannot do trading forex if you do not understand what market structure are. So we said we have basically three types of market structure. We have the uptrend, and then we have the downtrend. Now the uptrend is the bullish trend, or the trend that is going up. The downtrend is the trend when the market is moving down, and we have the consolidation. Now, the consolidation is, we call it a sideways movement of the market. That means it is neither in an uptrend or in a downtrend, but it's just playing around in almost the same point, same areas for some period of time. Depending on the time from your own, it may take months, it may take weeks, it may take days, it may take hours, depending on the time frame you're going to be working on. So this is the basics, or this is what we all need to understand. So let's start with an uptrend. So what is an uptrend? An uptrend is formed by the creation of higher highs and higher lows. Now, let's make it just that simple, that when we want to have an uptrend, we have an uptrend when the higher highs and the higher lows are being created. Are we together? So that means we are going to have, for example, now this is a low, this is a high. That's the first beginning. So every time a trend starts, it starts by creating a high and a low. Are we together? So if you have created a high and a low, as long as the market moves above this high and creates another higher high, meaning that this high is higher than this high, that's why we're calling it a higher high. So if this high is higher than this, it's going to be a higher high. And then this one now, this low is higher than this low. That's why we're going to call it a higher low. Let me rephrase that again. This high is higher than this high. That's why we're calling it a high high. This low is higher than this low. That's why we're calling it a higher low. So when we create a higher high and a higher lows consecutively, higher highs and higher lows consecutively, that means that we are actually creating an uptrend. So that is going to be the uptrend market structure. But now there's something very important. For this higher high to be formed, we must break above this high. That's what we are calling the break of structure. This BOS is break of structure. So as long as we move above the previous high that has been created, we create a break of structure. And then after breaking structure, then we go and create another higher high. And then after that, it should now have continued. If we are saying that we break this high and then we continue with this high, that means it's supposed to continue, but that's not how the market moves. We said the market moves in waves. So after creating that high, we need to create another higher low. So we have to create a low that is higher than the previous low. Are we together? So we're creating a low that is higher than the previous low. So if we create a low that is higher than the previous low, we are creating a higher low. It's a low, yes, but it's higher than the previous low. So that means it becomes a higher low. And then we continue with the same thing forever until we break below. Now, we are going to also learn about how to break below these levels and how to now know that we have changed the direction of the market and we are now in an uptrend and not in a downtrend anymore. Are we together? So simply put, that is an uptrend is formed by the creation of higher highs and higher lows. And you need to understand that a higher high should be a high that is above another high. And then a higher low is a low that is higher than the previous low. So as long as that is consistent, that means we're going to make an uptrend. And we also understand that the break of structure, we have to break structure to the upside. If we break the structure to the upside, we're creating an uptrend. So we can also have the same thing also happening here. So we have another break of structure over here. I'm going to show this on the charts, and then you see how that happens on a live chart. This is another break of structure, and then another break of structure. This continues and then continues and then continues. So we expect that now after the market has come here, it's also going to create another high. As long as the trend is going to continue in an uptrend, there are possibilities that it can reach there and then come down and then it reverse into an uptrend or turn into a sideways market structure. So we need to understand that first. So we have that as an uptrend. Now for that downtrend, we have it by the formation of lower lows and lower highs. This is a high, this is a low. But this high is lower than this high. So because this high is lower than this high, we call it a lower high. And this low is also there. And then we have a low that is lower than this low. So because we have a low that is lower than this low, we call it a lower low. So that's why we call, then if we have the consistent creation of higher and lower highs and lower lows, that one we are going to call it a downtrend. And it's also like the previous one, the uptrend, we said we create by breaking structure. So if we break structure here to the downside, we are expecting a lower low, and then the market comes, it should not go above this previous high. If market comes, we do not want to see this market breaking above this previous high. We don't want it to come and do that. If it does that, now it has broken the structure. We are no longer having a downtrend. Now we are going to look for it's going to turn into an uptrend because it has broken the previous high. So if this high, as long as it moves above this previous high, then it's no longer a downtrend. Are we together? Hope you understand that. Now, when you look at the sideways or the consolidation market structure, we are going to have what we're going to introduce a new term with this, the resistance, and we have the support. Now, a support is going to be like this floor, and then the resistance is going to be like the ceiling. So every time the market is moving between the support and resistance, it creates what we call the sideways or the consolidation market structure. So the consolidation and the market structure is created by the market playing around the resistance and the support. I have drawn it this way for a reason. That's why I left these points. Okay, I left these points to be a little higher. This is higher, and also made this one to be lower. So you can see it's not textbook that the market is going to move, draw a resistance and then draw a support, and the market is going to just be playing around from here to here, from here to here. No. Sometimes it goes above slightly, sometimes it goes below slightly, sometimes it doesn't reach where the resistance is, sometimes it goes below the support, but as long as the market is moving in that same line, in the same position for some time, we call it a consolidation or a sideways market structure. I hope everybody understands that. Now let's go to the live charts and you see what is happening right now. So you can see from gold right now, we have gold right here. So we said we have a high, higher low, and then from the higher low, we created a higher high. So we have a higher high over here. So we have a higher low, and then we have a higher high. Now let's use this market structure. Let's use this one. This is the current market trend on gold right now. We have a high, a higher low. We have a higher high. This high is higher than this high, and then that means you're going to create a what? That means we have broken the structure here, and then we have created another high. Now this low, this is a low, but it's higher than the low that we had previously. So as long as this low is higher than this low, it becomes a higher low. That means now we need to break structure on this point, break structure right now, and then we create a higher high. When we come again down here, we are going to break structure again. We broke structure here to the upside, and then we created a high high. This is a clear uptrend. So that means from this level to that level, we have we can call this clearly as an uptrend. This is an uptrend, very clear. We are moving in an uptrend. Why? Because we are breaking structure and creating higher highs and higher lows. That becomes an uptrend. Now let's look at this trade that we had. Now this is an combination of so many things that gave us this trade, but that's not going to be very important for now. Let's just understand market structure. So what I want you to do, that's the assignment. So what I want you to do is go to your charts, any instrument of your choice, and I want you to identify the downtrend. Now this, I've shown you the example of an uptrend, and I want you to go and identify a downtrend of the market structure. And then I want you to mark for me the lower lows and you mark the lower highs also with a breakup structure, just like I showed you on gold previously. So I want you to go and identify the downtrend. Also, you will do the same on this consolidation. I want you to go and identify a chart that looks like a consolidation. Then you're going to draw your support and resistance, and then you're going to mark for me the turning points on that area. So that's going to be the market structure. I hope you understand. In case you don't understand, please ensure to just put in the comment section and let me know what I can do to maybe explain it quite much better for us. All right. Thank you so much for listening. That will be for now.